Hi, everyone. Thank you so much for joining us for our webinar today. Good morning, good afternoon, depending on where you're located. Today, I am joined by Steven Greene, who is an account manager with Lightcast, and we are going to be talking about location reporting. Mostly Steven will be talking about it. If you registered for the webinar, which if you're here, then you registered, but you will receive a recording of the session, hopefully by the end of the week. Anyone who registered for the webinar and was unable to attend will also receive a recording. So if you are able to stay just for the beginning of it and then you have to leave for whatever reason, don't worry, you get the recording of the entire session. We will be taking questions at the end, so after Steven is done with his presentation and training walkthroughs, we will be answering some questions. So there is a questions section of the GoToWebinar side panel there. So if you have questions as we go, just type them in there and we will get to them at the end. So with that said, I will hand it on over to Steven.
Awesome, thanks, Chantel. Yeah, pleasure to do another webinar. Really I get the pleasure of whatever I learn that's new, that's exciting to me. I have the joy of like, oh man, that is awesome. I get to do a whole bunch of research on that, and I have the joy of saying like, hey, can I do a webinar on this because I think other people should know about this too. And one of those things is location reporting, specifically some aspects in location reporting that I just think is, to me, is mind-blowing. I really enjoy getting into the data and figuring the stuff out. And yeah, happy to share it, happy to talk about location reporting. So I originally labeled the presentation as occupations by location. You might have gotten an email saying, hey, come to the occupations by location report, the deep dive. But really in scoping out the project, and in working on this more, it evolved as I was really getting into some of these reports. So we'll be looking at, like I said, other location reports today. We'll also be looking at occupations, but we're going to be looking at industry location reports. We'll be looking at program location reports. We might even touch on job postings by location as well. We'll be looking at industry and occupation growth nationally, and then applying that to kind of find emerging markets regionally, so that we can find where the emerging market rudder is driving the industry boat to. So there's a lot of demonstrations, a lot of descriptions. So I'm going to hop over to the next slide. There we go. So yeah, when I talk about emerging markets, in the case of today's demonstration, today's webinar, we can really look at a number of emerging trends. So skills that are both growing, markets that are in need of people with skills, and programs that are not looking in areas that actually need the talent. We'll be looking where are the emerging trends, the markets. We'll look at growth trends, environmental factors, tangential regional differences between a region in California versus a region in Idaho, which is where I'm located. We'll be looking at what factors make them emerging. So regional inspirations and national afflictions. So is there something in California that says, hey, there's a Napa Valley wines, and California wines are fantastic, and that's why they're growing, because there's just something about that region that's making them grow. Or is it, the rising tide of the nation lifts all boats of these industries, of these occupations, and so there's nothing really special about a specific location. It's just nationally we're growing, or nationally we're sinking, and that's why we're seeing the change. And then how do we apply the data? So we'll be finding businesses to partner with, skills to address, understanding what are some of those differences, kind of setting aside some occupational groups and saying, okay, in this group of occupations within this location, what are some of the skills that are growing? What are some of the skills that are unique to that area that we can address? So we're doing this at a high level, at the 30,000 foot view. Built a brief workflow that we can look at, and we'll kind of follow throughout this webinar. We'll look at industry trends, so growth of an industry, what factors help or hinder that growth. Then we'll go into staffing patterns. Staffing patterns, all that means is how much of what occupation is in the industry that we're looking at. We'll be identifying growing occupations, breaking those out into appropriate cohorts, like I mentioned earlier, appropriate groups, keeping management occupations together, keeping marketing occupations together, keeping shipping together, kind of those types of groups. Then we'll do a deeper dive into those occupations, into the top occupations. So where are they growing? What demographics are we finding in those regions? Why are they growing? Why are they growing? Where they're growing? We'll look specifically in one of those regions, unpack what the labor market is like, what companies, job titles, and skills are needed. And then finally, we'll end at looking at what other institutions are making an impact in that particular region. So with that, we'll take a look at the industry first. So I'm going to hop out of this presentation. Whoa, jumping ahead. There we go. And then we'll get right into Analyst. I'm going to zoom in just a little bit so that you can see what I'm looking at. Maybe not that much. And I'm going to go into a table report, industry table report. I can hop over here and go into that table right here, but I'm going to go into it through my homepage just because I already have a pre-built report. So we don't have to wait for that Lightcast GIF to go on. So what we're seeing here is change in jobs over time, projected change in jobs over time. I'm gonna go to, or we can go to the 6-digit NAICS code or North American Industry Classification System codes, or we can keep it at the 3-digit. I'm gonna keep it at the 3-digit for today's demonstration. And then I'm gonna hover here as well and just kind of soak this in with you all. Today we'll be looking at warehousing and storage, but we'll also be able to add in some other columns that I think are interesting. One column I want to add in is average earnings per job. So if you're an institution that is wanting to add to look at regions that say or industries that the average earning is around X amount of dollars, and that's what you'll address, you can add that in there. We can add other wages, cost of living wages, location quotient, other hires, separations, establishments, demographic information, monthly information. If you haven't had a time to take a look at industry data, I highly recommend it. All of our reports I highly recommend. And then what we'll do is we'll start to throw some filters in here. We're going to be using filters a lot. And so, for example, we'll say average earning. We'll say average earning is greater or equal to 50,000. So it's going to filter our selection. And what we're finding here is warehousing and storage has a pretty significant change in magnitude, pretty significant percentage of change. And then we have a whole bunch of stuff that you might not know, what the definition is or what that's about. Obviously, establishments, there are 19,000 businesses, and average earnings is 50,000. But the rest of that, what does that mean? So hopping back into the slide deck, let's see here. Go back into slideshow. So what we saw was a group of definitions called shift share. All that together is called shift share. Shift share is, as it says, shows you the national growth of jobs of a particular industry, then calculates the likely regional growth, and then compares this estimation with the industry, the actual growth. And I'll unpack what each of these columns mean in the next couple of slides. We'll also look at location quotient. A couple of institutions that I work with already utilize location quotient, which is fantastic. I'll be doing some defining and refining of what that actually means. So again, as you can read, it demonstrates the industries or occupations that are truly unique and specialized in your regional economy compared to the national average. And so we're comparing two numbers right here, 17 and 22 location quotient. And so shift share is highlights job growth, so it focuses on job growth, and location quotient focuses on total jobs. A couple things to highlight because they do look and relatively act pretty similar. So to unpack those selections of shift share, we have the industry mix effect. The industry mix effect is the regional industry growth rate. So right now I have Idaho minus the national industry growth rate, which equals the industry premium. Then we use that industry premium to multiply the amount of regional jobs to get us the industry mix effect, not industrial. Sorry about that. So I had that highlighted as a mixtape right here because it's a mix effect and jumping ahead. Then we have the national growth effect. So the national growth effect is the national growth rate times the number of regional jobs, giving us the national growth effect. What I mentioned earlier about the rising tide lifts all boats. So we have a nice canoe there to demonstrate that. The industry mix effect, again, is, X industry. You can think about it as X industry is growing at a national level or declining at a national level. So we can predict it will also grow or decline at the regional level by X amount of jobs. And then the national growth effect, you can think about it as the economy as a whole is growing, X industry in my region will grow by X amount of jobs. Like I said, the rising tide lifts all boats. We also have expected change. And so taking that industry mix effect, we're adding that to our national mix or national growth effect, and we're getting the expected change. So to reconcile the industry mix effect and the national growth effect, we add the two together. And on the whole, we can expect the industry to grow by X amount of jobs. So Lightcast, we have new swag. There it is, Lightcast. One of our reasons for choosing the pink is because a red sky at night is sailor's delight. So we're making these expectations or projections based on what the industrial mix is and the national growth effect is, and that is the red sun setting at night. That's how I like to conceptualize things. The competitive effect is the actual change minus the expected change equals the competitive effect. So we have California with a grapevine. So we can say that this grew substantially more than was predicted by looking at job change. We can say that X amount of jobs were added. This means that out of X amount of jobs added or lost, the extra 20 jobs were as a result of some unique regional advantage that allowed for the industry to thrive. So let's hear it for Napa Valley Wine. Thank you for being where you are and allowing us to enjoy. One last thing, we have the location quotient. So the location quotient is another number. It's not going to be a large number. It's going to be based out of 1, so 0 to 1 plus. Basically, what we're doing is we're taking the regional industry employment, dividing that by the national industry employment, and getting the location quotient. For example, California wine. California wine takes up 8% of the regional jobs in California. This is just an example. It's not real numbers, but conceptually, California wine takes up 8% of regional jobs in California and 5% of the national jobs. So California's location quotient would be 0.08 divided by 0.05, we get 1.6, meaning there's a higher concentration. The concentration's impact on the regional economy also depends on the number of jobs present. So for us, this means that we can use location quotient to add in our program developing efforts, right? To reach those high impact industries. We can use this in conjunction with job titles and skills found in job postings to really produce graduates who are more qualified in the workforce, because we're looking at where regionally are we finding a higher location quotient. And so now that we are defined, we are ready to go, ready to get into the tools a little bit more. Hop back out of this, go back into Analyst. So I'm going to zoom in on warehouse and storage, this industry, 493. You'll notice that the competitive effect and location quotient are also, all zeros and ones. If you remember back to the definitions, though, that makes sense because we're filtering these effects nationally. These two effects have to do with regional factors. So to find what those competitive effects are, we'll have to get into some location data, get into the maps. So I'm going to keep 493 in the back of my head and go back over to my homepage, back into industries, and industries by location report, one of the top 3. Well, that's loading. We do beers with Lightcast. We should do webinars with Lightcast, or wines with webinars Lightcast, something like that. I digress. 493, warehousing and storage. And we'll jump into, I'm going to expand this, project this out to 2032 as well. Wines and webinars, that works. What we're finding here is the growth and shift share and location quotient and number of establishments nationally. I actually didn't add the location quotient in there. So we'll look at current year. Location quotient. There we go. Looking statewide, it's great. Might not help the most, so we can filter all the way down to county if we wanted to. I'm going to go to the MSA, Metropolitan Service Area. And then depending on your use case, we can start to grab the top 5, 10, 15, or 20 regions surrounding our industry specifically. You can really filter these to get an understanding of how these regions are growing and truly, and if it truly is due to, as we mentioned, national factors or regional factors. So right now we can see the top, both growing in magnitude, percentage, industrial effect, national effect, expected change, all of that is Riverside San Bernardino. So I want to take a look specifically at this MSA. Here we're seeing that, yeah, it's growing both in magnitude and percentage. And so with that, I'm gonna hop back into my presentation, doing a lot of back and forth today, but it's good. And for this, go back into slideshow mode, we see that warehousing and storage is growing at a national level. So we can predict that will also grow in California at the regional level by 40,000 jobs. This is the industrial mix effect that I was talking about earlier. Also considering the US economy as a whole, warehousing wasn't expected to grow all that much in our region. There was no tied national growth effect. To reconcile these, we add the two. Warehousing is expected to gain 41,087 jobs in the expected change. As this grew substantially more than was expected or predicted in the expected change, we can see that 28,000 jobs on top of the 41,000 were added. And so this is a little this isn't competitive effect, or this graph isn't representing competitive effect as well as I'd like, because competitive effects should be on top of this expected change right there. But kind of a nice visualization of how industrial mix effect impacts, or how these effects are impacted by the industry. So the industry is impacted by these effects. Sorry about that. And so I'm going to go back to my report here and keep this Riverside, San Bernardino, Ontario, California. And we'll look into what about this region? Why is there so much growth in this region? So I'm going to go to industry overview, get a better understanding of the growth of this region. 46,900 jobs, embedded talent, earnings per job, job posting demand. This is again for 2020. Actually, I might have to go back on that. But what I want to find are employment trends, unemployment rate trends 2020. That's crazy, but it's expected. Just fascinating. I want to go to jump to staffing patterns. So as I mentioned earlier, these staffing patterns are going to be how much of what occupation fills into our industry according to our region. So I have some highlighted occupations right here. See that growth? Probably no surprise, transportation, material moving occupations are the top growing. I'm going to expand this to 5-digit. And then I'm going to filter for education level. Greater than bachelor's degree. Now we know both the need, we can address the potential pathways that people within these occupations, within this industry can move toward. And we can start grouping these together to inform the rest of our search within Southern California. And then potentially broaden the scope to other emerging locations, right? So when I say group these together, you'll see that I'm going to group them by the first two-digit SOC code. We can group them by any number of things, but for the sake of simplicity in today's demonstration, I'm just going to group them by the two-digit SOC codes. And so what we can do is add another filter. And SOC starts with, and when I say SOC, I mean Standard Occupation Classification Code. Starts with 11. We'll go okay. Well, before I do that, I'll point out to you. So I'm basically grabbing general operations managers, I'm grabbing sales managers, administrative facilities, personal service managers, and kind of going down the list. And so we can have like this one cohort to look into, this one MSA. We can also do that with the 13 and the 15 and the 17 as well. So we can really break this out as much as we want to, according to what, whatever benchmarks we'd like to see. So anything, show me anything above 100% change. It really is, up to you, however you'd like to add those in there. So we'll go SOC starts with 11. And we'll apply that. Now we're finding all of our SOC codes starting with 11, starting with this one kind of group that we can build off of. I have a nice, I'm all about visualizations, and so I have a visualization of how you can break these out. So management occupations, all starting with 11. These are the SOC codes below. Business and financial occupations, all starting with 13. And then computer mathematical occupations, all starting with 15. You can start to build your own PowerPoints, build your own Excel sheets off of these and understand what regionally is going on. So I'm going to select all of these, brought the whole of one occupation group into, to determine further projects of these occupations. I'm going to go into job posting analytics now to understand skill gaps, companies hiring, current need, emerging trends based on this industry. So with that, I'm going to jump to my occupation overview table, because Analyst is fantastic at kind of interweaving between reports. So I'm going to scroll down. It's not looking good up here, 51,000 jobs, but we'll get a better understanding of what that actually means. Scroll all the way to job posting analytics. And the reason I'm doing this is because if we have these occupations by themselves, that could mean any number of industries within San Bernardino, Riverside, Ontario. So what I want to do is go down and add in my specific industry, and I skipped right past it. There we go. Transportation warehousing. We have this at the two-digit. I think we can do both two-digit and six-digit, but for the sake of simplicity, we'll say two-digit. So now we're finding 1,600 unique postings, a total of 6-to-1 posting intensity, which is actually pretty darn high. We have the advertised salary, advertised wage trend, a huge jump in 2020. Yeah, okay, makes sense. We can look at sample postings, all that good stuff. Posting trend, so it's trending upward. That's encouraging. Mostly looking for bachelor's degree, which makes sense because that's what we filtered for. Postings versus hires. Then looking at who's hiring. So XPO Logistics, posting at an intensity of 12-to-1. That's pretty, FedEx posting at an intensity of 17-to-1. Penske, 15-to-1. Even though they're not posting, they have 44 actual job postings out there. That's pretty unique, telling us that for every one job posting they have, they're putting it out in 12 different places, or they're putting it out in a number of times within our scraping time frame. So keeping companies in mind, we can take a look, add the companies to our filter, and find out what exactly are they looking for to inform our to inform our program development. Then we can also look at job titles and skills. So we can find out where the gaps are, start to assign these gaps as needed to address each particular cohort. And so not only do we have a gap in warehousing, pretty significant gap, but we also have maybe an oversupply of operations management. And when I say gap and oversupply, what does that actually mean? Again, we're filtering our job postings by the number our skill shows up in job postings and all the job postings we scrape versus how many times that skill shows up in the profiles. So that's online self-reported resumes and online profiles that you, me, anyone who wants to have an online presence in the working world can go on and put their self out there. And so we're scraping. Companies are looking for 30% or 30% of the postings we're finding are asking for this warehousing skill. Less than 5% of the profiles have that skill in their profiles. But over 25% of the profiles have ops management, whereas less than 20% of the job postings are actually wanting that. So it's helpful to have, but you're not really making yourself competitive. But we can look at auditing, logistics, data entry, occupational, OSHA, supply chain, process improvements, CAPA. So all of these are skills that is unique to our growing region, unique to our 26 occupations. And we can go down here and understand what are those some more unique skills that companies are asking for. Inventory management, P&Ls, billing, third-party logistics, Google Classroom, interesting. We also have top qualifications that we can benchmark across too. And so equally what I've done is I have set this up, if I were presenting this to whoever, I can set this up and say, hey, of our management occupations, of our SOC code 11 on, we're finding that within San Bernardino, Ontario, California, Southern California, that there's a need for warehousing, there's a need for logistics, and these are the companies that are asking for those. So finding both skills and companies to address it. And so that's zooming in on one specific location for a group of occupations. You can start to do these location reports across the US through occupations by location. So now we're getting into the occupations by location. So we're going to go back into my staffing patterns and wait for everything to load. Occupations by location, and I've already saved this. Well, no, I haven't. I've saved the staffing patterns. Add in my filters again. SOC starts with 11. We'll grab all of these and we'll jump to occupation overview. It's a little bit of a process, but when you understand now how Analyst can save your previous searches, it's a lot better than retyping all 34 occupations or whatever, however many occupations you have. So I'm going to go down again. We can benchmark our different regions against. So right now I have Riverside. If I were to say United States, because we're going to look nationally, we can start to make some benchmarks. I don't know what MC and PV are, but what I want to look at is jump to occupations by location. So wait for that to load, grab some water. So then we can ask where else are these occupations growing nationally? Like I mentioned earlier, you can start to benchmark some filters to get a large enough perspective of these emerging markets. So for example, if I were to say, here we have our growing regions according to our occupations. We have the occupational mix effect. We have the national growth effect, rising tide of lifts all boats, rising tide of our 34 occupations. Lifts all boats in New York, so it's not really that competitive. There's nothing special about New York, and we find that in competitive effect. There's nothing really special about New York that's saying, hey, we need these 34 occupations. And then we have our location quotient as well, which tells us there are more jobs in New York than nationally. So what I'm gonna do is add some kind of benchmarking filters to adjust this. So I want to say, hey, let's find all jobs growing over 1,000. and we'll say competitive effect to find out, where those outliers, we'll say greater than 1,000 as well. Here we have a healthy number of maybe some emerging regions according to our 34 occupations. I'm not going to stick with this alone because, like I said, we're not filtering for our specific industry. We can't do that in this report. So I can go back into our job postings and filter for industry. So I'm going to select all of those, jump to occupation overview, get an understanding of how are these occupations maneuvering around our MSAs. So we have, again, a large amount of data right now, but we can start to filter. See right now, this is an example of how much of these occupations fill up in what industry. Right now, the bulk of these occupations fill up in other industries. The next largest is management of companies and enterprise. And so that's why I want to go to job postings to define that. I'm going to go to job posting analytics. And then filter for our industry. So now we're finding in our 64 metropolitan service areas within our 34 occupations, all under the warehousing industry, 33,000 jobs, 33,000 postings, not jobs. Wage trends with that, they're kind of scattered across the where there are people, not surprisingly. We can go in, if you're maneuvered within Analyst before, we can go in and see what those postings are, what the trend is, trending upward. They're asking for a bachelor's degree, a good portion of them, 60%. And then who's hiring? So still, XPO Logistics is hiring, the bulk of all of our occupations. The posting intensity of 8 to 1. That's intriguing to me. Next is DoorDash, which is also intriguing. If I were a naturally curious person, I'd want to go into DoorDash and understand, okay, what about DoorDash? Why are they hiring? What are they hiring for? Maybe it's noise in our data, or maybe they're actually looking for someone to move people, which DoorDash is may move food. So that makes sense. Delta Airlines, UPS. We can understand what job titles, so operations managers, freight operations supervisors, and then again those skills. So again, gap in skills for warehousing, gap in skills for auditing, a little bit of oversupply for operations management, right on the money for marketing, on the money for process and supply chain, process improvement and supply chain. But here's an opportunity to go in, explore some of these more unique skills and understand, what about these regions might we want to look into to inform our program development. So with that, we've looked at the demand. Now we'll shift gears a little bit, go into some competitor analysis, right? So now we know what's needed, where it's needed. Now who else is, right, addressing the need. So we can go into programs by location to address this as well. It's going to be in the all other program reports, programs by location. I'm going to filter for logistics, and we'll run that. Again, you can equally, determine what kind of benchmarks you want to look at this data to on. I'm comparing this to annual openings in jobs, and so if I filter for that, you can also kind of lay your maps on top of each other. So we had a huge growth in Southern California, some growth around the middle of the U.S., coastal regions. So you can kind of lay your maps on top of each other outside of Analyst and say, hey, let's look at institutions that are offering programs in those regions specifically. But here we can tag our MSAs. And so, what if I filtered annual openings greater or equal to 1,000? Oops, not 10,000, just 1. I can tag all these MSAs, healthy portion of them, and jump to my program overview report. So program overview report tells me that 96 institutions are addressing these regions within our logistics program, 3,600 completions in total over 2020, I'm sorry, or 2020. And then we're tagging in occupation data as well. We can see market share by institution type. And then we can see completions by institution. So who are those institutions that have the bulk of the market? Where are they, right? Where are they growing? Is there growth year over year? Is there decline? Is there an opportunity for your institution to maybe enter into that market? To maybe offer, look at these institutions, look at, how they're offering their programs, what their syllabus says, and if they're not addressing something that you can address based on the skills, based on the job titles and postings that companies are looking for, maybe there's an option for you to look into what market they're addressing. So we see trends here, and then going down, target occupations, job postings, etc. So program overview report allows you to see, again, that completion data. And if you haven't looked at this before, you can go in here and understand how these institutions are completing year over year. So with that, a little bit of competitor data. We will have that right there for you. We'll open it up to some question and answers, I hope. Again, we took a look at the 30,000-foot view to understand what industries were projected to grow, discovered how that industry was growing by looking at the shift share and location quotient. Then we dissected this industry up by occupations. We broke one group of occupations out, found the skills required in companies searching, and we flipped the page to understand what the competitor outlook is, mapped to our emerging occupations. And so again, open up to question, answer, additional comments or questions if needed. And as always, if you do need to rewatch or consider the webinar, think about it a little bit, you can certainly come back with questions by either contacting myself or your account manager or representative at Lightcast. So Chantel, any questions for us? I think you're muted.
Thank you.
Yeah.
Classic webinar mistake. That was great. Thank you so much for all of that really good information. This, as I mentioned before, this session is recorded, so you'll get a recording. This may be a webinar that you want to come back to and watch, like when you can pause and follow along. This is really, really good work in Analyst from someone who's obviously an expert on the tool. So definitely, if you have time to come back to the webinar to refresh or follow along, it might be a good one to do that with. So there are a couple of good questions here. We'll try to get through as many as we can. If we don't get to them all, I will make sure when the webinar is over, I can export these questions and get them to your account managers so that someone can follow up with you if there are questions we don't get to. So a couple things. One is there a way to link credentials to the occupations in a given region? I think maybe like skills and or certifications to see what the occupations are that are associated with them.
Yeah, so linking credentials, is there a way to link credentials to the occupations? Mm-hmm. The best way, if it's maybe like a micro credential or just a qualification, would be in job postings. looking in the below skills under the top qualifications. Other way, excuse me, is to look at program overview. To look at a program overview report, if you have a award of more than 1 but less than 2 years or something like that you report to IPEDS, then we'd be able to connect that to, sorry for the scrolling, to our target occupations and to our job postings. But when you get into the micro credentials, stuff that's not really reported to IPEDS, then we can't scrape that unless it's found in a job posting. If companies are specifically looking for a credential, then we can go into job postings and find that.
Great, thank you. Let's see. When we look at programs for specific occupations, can we also consider certification programs? It looks like most of what we have is universities.
Yeah, that would kind of touch back on my previous answer, I believe, and Chantal, correct me if I'm wrong, but as it's reported to IPEDS is what we're going to grab. And so if there is a program that you have as a credential that you report to IPEDS, like I said, it's an award level of greater than 1 year, less than 1 year, or less than 1 year, or between an associate's and a bachelor's, between post-bachelor degree, baccalaureate degree. We can grab those if you report it to IPEDS. If it's not reported, then the best way to get that is through job postings. Yeah. Otherwise we won't be able to grab that.
Yep. If the certificate program is like not for credit, which there's a lot of programs that are like that now, through like online resources, and there's a lot of that out there. Those don't get reported to IPEDS, so we don't really have a way of capturing those in any, there's no central place like IPEDS to report people who complete those programs. Unfortunately, everyone would love for there to be something like that, but there isn't. Let's see. Can you do the research that we did today, or that you walked us through, using different timeframes?
Yeah, absolutely. If you wanted to do a 3, 5, 10-year outlook, you definitely could. If you want to do a historical, you definitely could. As the, after 2022, you're definitely going to get harder numbers because they're not projections, they're actual numbers, right? But when you start to project, then that's where it, depending on what you're looking at, that's where, they're projections, not predictions. So yeah, you can absolutely change the time frame.
Great.
Yeah, good question.
Let's see. Can you just briefly explain what IPEDS is for people who don't know?
Yes, so IPEDS is the integrated post. I knew that was going to stump me. Integrated post-secondary. Yeah, so we have so many acronyms, and I'm not afraid to look things up because if I were smarter than if I held all that in, I don't know what I'm trying to say, but integrated post-secondary education data system is what IPEDS is. And so institutions will report their programs to IPEDS to get government funding. It's just a national site that institutions report their information to. It's a system of interrelated surveys conducted annually by the U.S. Department National Center for Education Statistics, NCES. And so we grab data directly from IPEDS. We grab completion data from IPEDS. We grab some demographic data. We grab, can't remember exactly everything we do grab from IPEDS, but yeah, great question.
Awesome. Okay, great. Well, we are coming up on time, so we will let you all get back to your days. But thanks so much for joining us today. Again, if we didn't get to your question, I'll have account managers reach out with any follow-up items. And next month, our training webinar will be a product update. So I'll have Michael with me, and we will go over all the things that have come to Analyst that have been updated in the past about 4 months it'll be. So be sure to join us for that, and have a great day. Thanks, Stephen.
Thank you.